Hey friend, taxes in any country can be quite confusing, especially for the newcomers. In today's video, I want to break down one very important part of the Dutch taxation system called wealth tax or box 3 tax, so at the end of the video you would be fully equipped to deal with this topic. Let's dive in. Dutch taxation system divided into 3 categories called boxes. So we have box 1, box 2, box 3. Each box working differently depending on the type of income. Box 1 is your income tax. It's the main tax for your salary, etc. I covered this topic fully in another video. Check it out by the link in the description or in the corner. Box 2 is quite rare for regular people. It's tax for substantial ownership in the limited company or partnership. So it's taxes for your gains or dividends. And finally, box 3 that we're discussing today is taxes on your wealth. Things like savings and investments. Let's take a look in details what exactly box 3 is taxing. And stick until the end of the video because I will be telling you how this taxation system is changing and quite soon it will be working differently. In general, box 3 system was created to tax your wealth or your assets. More specifically, it's all the cash you have on saving accounts, also all your investments, things like stocks, ETF, bonds, cryptocurrency, pretty much any investment type, your second home or investment property, so not your main residence, but any second property you have, including both in the Netherlands and abroad, any valuables you keep as investment assets, it can be even like very expensive luxury bags or cars. The idea is that you bought them specifically as an investment asset. Also, in this box, calculated any of your debts, things like credit cards, bank loans, negative investments, but not your house mortgage. It's pretty important because house mortgage is in the box 1. By the way, if you're planning to buy a house here in the Netherlands, I actually wrote a pretty extensive guide how to buy a house here. It includes 50 plus pages of everything I know about buying a house here, my old experience. It also includes very extensive mortgage calculator where you can calculate buying versus renting, also your mortgage payments and everything you need to kind of have all the numbers in front of you. So check it out by this link or link in the description, and back to the video. Also, which was quite surprising for me, is your VVE contribution or your owner's association. When you buy an apartment, often you have to do these contributions and they stored on specific savings accounts and you also got taxed for that. And also some type of insurance policies that can accumulate money, like endowment insurances, but only if it's not connected to your mortgage. So if you have a life insurance connected to your mortgage, it's not taxed in box 3. As I already mentioned, your main house, your residency, is not taxed in box 3, and it can be a downside as well. For example, you have a large debt in your mortgage and you could have offset this to pay less taxes on box 3, but unfortunately it's impossible because your main residency is a box 1 asset because you're living in it. Same goes for any of the possessions you use in your daily life, for example your car. Some of the investment also considered exemption from this tax, but they're very specific, that's called green fund, and they can only be invested through very limited list of banks here in the Netherlands. The returns on them pretty low, so I'm not sure if many people are interested in them. Now let's talk about how this tax is actually calculated. And this is a very interesting part because not many countries, none of them actually, as far as I know, calculate wealth taxes the same way as the Netherlands does. Basically, you get taxed on notional return, meaning Dutch tax office assumes by the type of asset how much money you made this year on this type of asset and they tax you on this amount. I'm saying this, I already can understand how ridiculous it sounds, but this is historically how the taxation of wealth works here. If you didn't make any money on a certain type of asset, for example, the saving account had minus return, or your investment didn't perform very well, or there's issues on the market, you still got taxed on this notional return, and I assume that the idea was that on the long run, on average, you get this percentage return that they assumed, but still, this notional return thing it's not working. And I will tell you that the system is changing in the future at the end of the video, but let's talk numbers. First of all, your assets in box 3 category divided into 3 subcategories. First called bank balances and savings, second investments and assets, and third is debt. And based on this subcategory, Dutch government assumes how much money you made on this type of asset. Bank balances and savings, meaning all your savings account in the Netherlands or outside of the Netherlands, also your cash, premium deposits, and also VVE or owners associations, or money you held in the notary third-party accounts. Notional return for this category for 2025 is 1.44%. So the government assumes that in this category you will make 1.44%. Next we have investment and assets. Here you have all your shares, bonds, securities, other types of investment, also non-extent part of your green investment, because green investment is also limited, that I talked about the green fund, your second home in the Netherlands and outside of the Netherlands, home you're renting out, so your investment property, other immovable property that you keep as an investment, and cryptocurrency. And everything that goes as an investment goes into this category. On this subcategory, Dutch government assumes you make 5.88% as a notional return. So they tax you on that return. Next, we have debt. So if you have some debt accumulated, you can reduce your tax base, and they also have to provision how much debt you're paying every year. So how much is your debt accumulation? In debts, we include any debt for a car or a holiday, also negative balance on a bank accounts, debt to financial shares, bonds, securities, so your negative investments, also debt for a second home or other movable property, also something called lifelong learning credit that you must repay, also inheritance tax, and the debt resulting from the donation on paper. For the debt, Dutch government assumes is a minus 2.62%. I should mention that both bank balance and the debts, it's a provisional percentage, so they're not 100% settled on it yet, and they will settle on the percentages until the end of the year. But for investment in assets, this 5.88% is already settled. It's going to be used in 2025. Those accumulations, your assets, are not taxed 100%. There is tax-free allowance. Some parts are not taxed, and for 2025 you have an allowance of 57,684 euro if you are just a one person, and if you have a partner, your fiscal tax partner, together you have a tax-free allowance 115,728 euro, which is quite substantial amount. If you don't have many assets, it's pretty good and you won't be paying much. All of this sounds not clear so far, right? Because you don't really understand how they do it. So I want to go through the example calculation. It would be more clear for you how they actually calculate this. And it's not as straightforward as you might assume. And I will take as an example more or less realistic type of assets that many people have. So cash and investments. So let's take as an example that you have 50,000 in savings accounts, so it's your cash part, and 100,000 on the investment accounts, stock market, for example, or cryptocurrencies, doesn't matter. And I also want to assume that we are filling this tax return with your partners. All of those assets, 150,000, you accumulated together and you're filling your taxes together. First of all, the only thing that you're checking is your balances. Balances specifically on the 1st of January. It doesn't matter what happens after that with your balance. You withdraw, you add a new. Only matters how much balances you had on the 1st of January. If you want to add some money into investment accounts, for example, it's usually a good idea to do it after the 1st of January. Same goes with the withdrawal. If you want to withdraw money from your investment, it may be a good idea to do it before the 1st of January. First, they calculate the tax taxable return depending on the subcategory of this part. 50,000 cash, we have this notional return 1.44%, and we got a 720 euro. And for 100,000 invested, they assume the return of 5.88%, and we got 5,880 euro. This is a notional return. They assume that on your savings account you accumulated 720 euro, and on your investment you get a return of 5,880 euro. Then we just add two numbers together and we got 6,600 euro. Next, we calculate your tax base. Tax base is your assets minus debt. This is a necessary part if you have any debts, so you reduce your tax base, but debts are also limited with the threshold, so you cannot have like unlimited amount of debt and reduce your tax base to zero. Debts are limited for 3,800 euro for one person, or if you have a tax partner, it's limited to 7,600 euro. So next, third step is where you're calculating your tax base, subtracting those tax-free allowances I talked about. We have 150,000, so we're subtracting 115,728, and we got at the end 34,272 euros. Or because we're filling tax return together with your partner, because it's much better to have as lowest number as possible per person, this is where you divide it, and you got each of you 17,136 euro as your tax base. Next step, fourth step, is a little bit confusing and could be complicated, where you calculate your share in the tax capital base. So you have to calculate how much of this tax base in your total assets. You divide this number, we calculated in the third step, 17,136 to 150,000, and you multiply it by 100 to get a percentage. At the end, for each person, you have 11.424% for each of you, and this percentage will be used in calculating how much income you got. We take this 6,600 euro we calculated in the first step, your notional return, multiply it by this percentage we calculated in the previous step, 11.424%, and we got 753.98 euro, and this is an income that government want to tax you on. But of course, tax is not 100%, so you have a last step to calculate. And we take this notional income and we multiply it by actual percentage which Dutch government use for box 3 assets, which is for 2025 is 36%. Take the 753.98 and we multiply it by 36%, and we got 271.43 for each person. Each of you, when you're filling tax return, will be paying this number. It's usually rounded, so you just paying 271 euro. All of those calculations, it's just an example. It's just for you if you want to calculate it beforehand at home, or just do a different variations and think how much money you want to store in assets, etc. But you don't need to do it actually when you're filling your taxes. It's all built in the tax return system. Only thing you need to do is to fill your balances on 1st of January of the previous year, and the system will calculate everything for you depending on the subcategories you filled in. At the end, we got this 271 euro, or for two people, you actually will pay 542 euros. And it's quite hard to understand whether it's number big or not. I would say for portfolio of 100k invested and 50k in your savings account, it's not that big of a number, but you should remember that we are reduced tax base quite heavily with the tax-free allowance, so everything that goes above these numbers, if you have a bigger portfolio, will be taxed higher and higher, and for a really big number of assets, taxes can be quite high. Let's talk about issues of this system. As I already mentioned multiple times, the notional return or fictional return is not a very good system. If your investments are down, you're still paying taxes, and also it promotes very risky investments. So if you're a day trader or if you invest in some risky assets and you got quite a good return, you're paying low number of taxes. But for people who actually invest in conservative portfolios, they want the financial freedom, or they're investing for pension like ETFs or even bonds, they're still paying quite a high taxes even if the portfolio didn't perform as much. And this is where it gets really unfair. Right now, taxpayers actually can appeal and get a tax refund for the system if they had actual results, actual returns different from the fictional returns. I think you can still apply for 2024 and 2023. If this difference really high, you can try and calculate it and try to appeal, but you will need to actually prove a difference in the returns to the government. There were two Supreme Court hearings about this system in 2021 and in 2024. During the first hearing in 2021, they decided that this system is unfair and should be changed. That's where we got into this subcategory. So now for each type of assets you kind of have a subcategory, but it still works the same way and the tax on fictional returns. So in 2024 there was another hearing of Supreme Court, and that's where they decided that this system should be transformed completely, and this is where we are now. We are currently in the transition period, so from 2024 until 2027 this transition will be happening. Dutch government creating and shifting their tax system into the completely new. Of course, it takes quite a lot of time to change all the software, all the systems, all the bureaucratic things that related to this, but from 2028 we will have a completely new system, and they already published a final bill. When I first heard about this, I thought the system gonna be similar to other European countries and actually all the countries around the world, and it's gonna be taxing capital gains on the realized assets. So when you're selling your stocks, for example, everything you get from your brokerage on your actual bank account, they will be taxing this amount. But unfortunately, the Dutch government decided to go with a little bit weird system again, and they will be using capital gain system, but on all the assets, even on unrealized. So they're gonna be using this balance system again. So you're checking your balances on the first day of the year and the last day of the year. Even though you didn't withdraw this money, you're still gonna be taxed on the whole amount. And the immediate question is what's gonna happen if your investment go down. Thankfully, they decided to go with tax credits. If all of your investments are down, they can be used as a tax credit and reduce your taxable base next year or in next several years. It's actually unclear how many years you can carry this number for. I assume indefinitely, but this number have to be 500 euro or more. So if you have less than 500 euro losses, then you don't carry anything and your tax credit is zero. Also, of course, they added tax-free earnings. It's 1800, so 1800 euro. I don't know, it's not a large number in my opinion, and the tax will be the same 36%. I'm not quite happy into this system, and I tried different calculations for my personal portfolio. In the different scenarios, I still gonna be paying more taxes than I paid with the current notional return system. Of course, it depends on how much my portfolio was performing in a specific year, but in general, it's just means I'm going to be paying more taxes. In my opinion, it should be changed on the realized tax system, because this is the money you actually earn and can use. This system again doesn't promote the actual investment in the stock market, which is, I don't know, it's not good in my opinion. This system will still have to pass the parliament, but to me it's almost inevitable that we will see it, because they are pushed by the Supreme Court and they already started transitioning. It's still unclear if we'll see it in 2028. Maybe they didn't have enough time because it's already in a couple of years. Maybe they will push it back on several years later. Also, considering the current government is not even formed, and we will have an election in October. I hope this video was useful and you know how box 3 or wealth tax works in the Netherlands. And of course, don't forget to like this video if you find it helpful. I see you in the next one. Doei doei.